Welcome back, everyone, from that fantastic session. Thank you, Demi, and thank you to all the panelists. Always a pleasure. Always exciting to hear more about land-based aquaculture from such a diverse crowd. It's even more exciting. So we're going to move on to the investing portion of our event. And again, we have a fantastically diverse set of panelists here that are going to give us a really great range of what private capital can do in the seafood sector and how that can drive innovation and ultimately profitability, because that is indeed what investing is all about. So let me quickly introduce the panelists so they can turn on their cameras and microphones. Amy Novogratz is the co-founder and managing partner of Aqua-Spark. Tuna Hanstad is a seafood investment specialist at Ferd Capital. Larsen Mettler is managing director of oceans and seafood at S2G Ventures. And Thor Talseth is a founding partner of Neptune NRCP. Hello, everyone. Welcome. So let's dive right in and get some discussion going in the short period of time that we have. So one of the commonalities between all of you is that biomass isn't necessarily the primary focus of your funds. Although some of you have directly invested in biomass, primarily I've noticed that more and more the investments are coming in ancillary businesses: fish health, genetics, technology, water quality. And I want to go to you, Amy, because you've been taking this tack for quite a while, looking at a much broader canvas for the seafood industry. And I want to hear a little bit about your strategy there, and what those small stakes that you've taken, and what those kind of smaller businesses bring to the table, and how you want to grow those.
So when we first started looking at aquaculture in 2011 or so, we primarily were interested in investing in biomass. And when we started kind of looking for sustainable farming operations, we realized if aquaculture is really going to double, maybe even triple in the next 20 to 30 years, we need to produce an immense amount more than we are now. We're not going to get there with the way we're producing now. And so there was a major role for technology, for new ways to monitor for and treat disease. Feed was brought up in the last session. Feed's a big priority to us. And we see all of those areas kind of all along the value chain as a real opportunity for investing in aquaculture. We have 20 investments right now in technologies, farming, and across the value chain. And our approach is we're more like a holding company than a fund, which enables us to really activate synergies amongst the portfolio so that the farming operation can test the feed ingredients and the feed ingredient, and you can start to actually redesign the system at large. And so when you think about where we want to take aquaculture and what sustainable aquaculture really looks like, it's really getting all of these elements perfected and finding a way where they're kind of working together and benefiting from each other.
So Thor, you come from a background of investing in sort of pure play seafood, and biomass, and in all kinds of other sectors. So tell us a little bit about your philosophy on that, because you've also moved more into the ancillary and support side of the businesses. So where do you see those opportunities, and are you finding that same strategy as Amy is at Aqua-Spark, of kind of building up the businesses that you're trying to grow?
Definitely. So I would say that having experience from across the value chain and in a way connect the dots and see where the opportunities lies is important for us as an investor. So I wouldn't say that there is necessarily a trend for us to go from farming to supporting activities, but as a farmer, you see what works and doesn't work in terms of feed or services or inputs, and that gives us important and valuable input when we are starting to proactively look for what we call platform companies, where we can acquire often a majority stake and help that company grow and develop, because we have seen how, let's say, successful that company has been in interaction with the other portfolio companies that we have.
So Larsen, S2G is taking kind of an interesting philosophy along these same lines, where the tent for aquaculture, fisheries, it comes under this whole notion of oceans. So I'm curious to what now falls under that area of oceans, and is the investment sphere for seafood kind of getting broader?
Yeah, so our strategy is to invest throughout the entire supply chain. We're looking at ocean health, we're looking at production technology, also animal and human health. I think that historically private capital has been deployed to consolidate a fragmented commodity business and also fund CapEx or a dividend play. We're really seeing recent technological advances in consumer awareness regarding health and climate change, which are driving innovation. It's bringing newfound growth, and it's really de-risking the entire supply chain. So we're seeing that there are some exceptions, but most large seafood companies haven't been able to exploit the opportunities because they've been too focused on managing volatility in the sector. They've been avoiding risk and watching their balance sheet, really planning for large outdated maintenance CapEx. So generally, they don't have the time to support these technologies or the capital structure and energy to support ideas that they need to incubate for 5 to 10 years. So that's really created a need and an effort from investors like us with private funding to drive growth and remove volatility there.
So Tuna, I'm going to go to you with that same question. So let's talk about Ferd's strategy there as well. Quite diverse. So how is Ferd sort of viewing the entire aquaculture space, and where does it make how does it make decisions on where to put its funds?
Yeah, that's definitely a big question. You know, we have different divisions that has a different focus, but of course, what we see when it comes to aquaculture, and the reason for us having aquaculture as a focus industry, is that industry still has a lot of innovation going on and is still at an early phase. And we see this, you know, we can observe this from all different projects and the new companies within seafood overall, where many are quite small. So I think that we hope that players like us can be valuable partners, and we love the partner word. That's a very important part for Ferd to take that role, and we hope to be a partner when it comes to achievement of both growth and profitability. And, you know, to be more precise, hopefully we contribute with more than capital. So we like to think at least that we can bring something to the table, and that comes both to, you know, industry knowledge, the network we have, and also experience from other industries and different growth paths within this. And I could also add processes, because there's a lot of processes and regulations to take into account, for example.
So I want to talk about that ESG element as well, because I think one thing that it seems to me, and absolutely disagree with me if you do, but it seems that aquaculture is it's somehow it seems to be morphing into this area where investors actually see it as a potential ESG play, where it's potentially turning into an impact investment and a sustainable investment. So Thor, do you see that change? Do you see that investors, especially in your fundraising process, that they're thinking differently about aquaculture than maybe they did 5, 10, 15 years ago?
Definitely, absolutely. And I think from the aquaculture industry's side, we didn't really have a lot of high thoughts about ourselves 15, 20 years ago when it comes to our sustainability profile. And I think two things has changed. First of all, the industry has become much better operators. So it's all about fish health, fish welfare, and that is directly showing up in the P&L. So as operators, we have improved tremendously over the last 10, 15, 20 years. And I never say that the other area is that we didn't really have strong benchmark metrics 15, 20 years ago. Now we know that aquaculture is the more efficient, sustainable way to produce animal protein. So in fact, we really don't have anything to be embarrassed for right now. In fact, quite the opposite. And that is not lost on investors. They see that aquaculture represents an attractive strategy to produce animal protein, healthy animal protein in a sustainable way. So it's been a tremendous change over the last 15, 20 years when it comes to both performance and how we factually stack up against other parts of the food agri value chain.
Well, I think that's really interesting that it does seem that suddenly it's not viewed necessarily as this outside sector that continues to need improvement or doesn't really fit into that sustainable ag portfolio. Larsen, S2G Ventures had been in seafood in a very small way, kind of in a downstream way, but obviously this fund shows that there's a desire to expand, and obviously S2G has had a sustainability focus, an impact investing focus. So what do you think changed at S2G, being a family fund that hasn't necessarily always been focused on aquaculture and seafood?
Sure. S2G started in 2014 really as a pioneer in sustainability in food and ag. So I think this is naturally an extension of it. And when you think about investing, it's really a deferral of instant gratification with creating the goal of something useful in the future. So on a personal level, you have people doing investments in education funds, 401k plans, healthcare. So it only makes sense for businesses and investors to plan for decades ahead. Not only for themselves, but for future generations. So for S2G, we've adopted an ESG and an impact thesis into our core beliefs and long-term investment strategies. And I think that with these strategies, we're really achieving above market average returns because we're aligning risk management and operational hazards with the priorities of consumers, beneficiaries, and stakeholders. I think that's further evidence just in the market in general. Morgan Stanley put out a report at the first half of this year in the pandemic that kind of first kicked off, but first half of 2020, funds with ESG and sustainability built into them outperformed all the peers by about 3% in that short period. And even at the beginning of 2020, you've seen additional capital coming into the market. So there are 17 trillion of assets under management in the US, which is about 30% sitting in these investment strategies, which is a 42% increase over 2 years. So our strategy hasn't changed. I don't think Amy's has changed. Probably anybody on this panel. We've understood how we're aligning this risk and using it as a mitigant to achieve above market averages.
So I want to talk a little bit about ESG in particular, and whether or not I think there's a general fear, or there has been maybe myth is the proper way to put it, that ESG, sustainability, and profitability can be mutually exclusive. So Amy, you have again taken stakes in companies that all all have that sort of ESG element to it, and you've had that strategy from the beginning. Are they mutually exclusive? Does it need to be doing the right thing with money, or can you make money and do good?
I actually think this is why aquaculture is such an exciting opportunity right now, because it's showing that when you have kind of the ESG focus, it's a better investment profitability wise as well. I mean, you look at kind of technology and what it can do for aquaculture. In these technologies that are working on kind of making aquaculture more resource efficient, optimizing practices, we have a company that's feeding fish and shrimp automatically in Indonesia. And when farmers just use that technology, it has other features as well, but just the feed technology, it almost doubles their profits. So we're quickly showing with aquaculture that by doing well, you have better results, more profitability, better production. I mean, saving feed is a big one, right? Feed is a huge amount of the cost of operations. And if you're saving big amounts of feed because you're feeding optimally, it's a kind of a no-brainer. And across the board, I mean, fish it's a sensitive creature to its environment. It performs better when the water quality is right, when it's being fed the right amounts and the right kind of feed. And so yeah, I mean, we've set out to kind of prove that if you invest in really sustainable aquaculture, you actually can bring returns that are comparable to today's traditional, or whatever that means these days, but in 2010, traditional industry. And we've so far, we've kind of proven that we've gotten over a 20% net IRR each year. It's still early days, we make early stage investments, but we are pretty confident that we're going to be able to prove this and show that this is the only sense of commercial aquaculture that should go forward.
So Tuna, Ferd has had, Ferd's a family fund. And Ferd has really repositioned some of its funds and some of its money toward impact investing. What does impact investing at Ferd mean in the aquaculture sphere? So what are the kinds of investments that that Ferd looks for to carry that mission forward?
Yes, so this is the Impact Invest, which is run by Erik Børstad, and his mandate is to target to both deliver a positive effect on climate and environment, and at the same time generate a positive financial return. And this is one of the reasons why seafood is selected, because of the reasons that Amy just mentioned, right, where sustainability and profitability goes hand in hand. The focus on the mandate is early stage companies, and in addition to aquaculture, they also focus on renewable energy and PropTech. And their focus or how they invest is mainly through funds and also other partnership structures. When I'm speaking, I would like to add also a challenge to ourselves, or something I think is important also to mention when it comes to ESG, because I work quite a lot with the ESG perspective, both from both when I worked in DNB as an academic research analyst and now at Ferd. And I think that it's obvious to us that ESG is at core of this industry, but we also see that there's a lot of bodies that doesn't know the industry that well. And also I spent quite a lot of time to learning about the EU taxonomy, where the seafood industry is not yet mentioned or included. But I think that we both need to have and also work to make these bodies understand our industry, because this is a very small industry and quite new to many. To put that on the screen as well.
So Tuna broke up just a little bit there, but just as an aside, we'll follow up on the reporting side and make sure that we talk to more of you to get deeper thoughts, because our panels are short, as I said. So Thor, let's talk a little bit about identifying these opportunities, because you've been doing this a long time. You've been looking at all kinds of different sectors, looking for those opportunities. So how then should investors go about finding these opportunities? And as a second part of that question, the ag sphere jumping in, what don't they understand when they, I'm talking general ag investors who are really dogpiling into the sector, what generally don't they understand when they're looking? So first part, where are these diamonds in the rough?
First of all, I would just have a final comment on ESG. I don't think you will find a single sector where there is so strong alignment between good ESG performance and good financial performance. Exactly because, as Amy said, fish is sensible creatures, and if they're not treated well, they don't perform. It's as easy as that. So when it comes to finding the right investment targets, it is a very fragmented and very private industry. You cannot identify the good opportunities relying solely on publicly available information. So for us, it comes down to our networks, our relationships. As I said, connecting the dots where we see where are the good operators. So what works in certain areas, in certain regions with certain species that can be deployed in other areas, other regions, other species. And in order to make those assessments, I do believe that having the relationship and industry knowledge is tremendously important. So when generalist investors seek to invest in aquaculture, they only see, let's say, the top of the iceberg. They see the larger companies that everyone sees, and we are in a way going in the layers that are less familiar for the generalist investors. And in a way identify the unpolished diamonds, and then it's our job to help that company, and as Tone said, to partner with the management team and the existing owners to take them to the level, both in terms of size, in terms of systems, in terms of overall performance, including ESG. Starting measuring ESG performance as to measure financial and operational performance, so that you tick the boxes for the larger generalist investors, because there are many of them looking to deploy capital in aquaculture. It's just that not many companies fit their criteria, and that's basically our purpose, to take great companies, but smaller companies, and let's say with some lack of systems and maybe a thin management team, great management team, but not large enough to take it to the next level, and then help them take out their full potential.
I see you nodding there, Larsen, and so I want to talk to you a little bit about that. Now, since the opening of the fund, I believe it was $100 million, correct me on that if I'm wrong. What kind of incoming have you had in terms of companies that are looking for this kind of capital and looking for this kind of leg up? And have you been surprised?
Yeah, I've been surprised. We've been tracking it. I think with myself and Kate Danaher, who's the co-MD on the fund, we've had about 350 to 400 discussions with companies at this point in the sector who are looking for capital. So it's been pretty welcoming. I think we have probably seen a little bit higher hit rate than maybe some other funds that are solely focused in aquaculture, really because we are spanning the entire supply chain here, right? We're looking at climate solutions, sustainability, production efficiencies, cost, convenience, animal and human health. So we've really seen a lot in that sector. We've also seen a lot being driven by tech and data. So IoT, really trying to understand how the ocean is impacting the different sectors here. So we've been pleasantly surprised, and we've also been pleasantly surprised by the co-investor network. So, when Thor talks about partnerships, I think it's partnerships with the industry as well as the general ecosystem of investors, like everyone on this call.
That's amazing, given that the fund has only been around for such a short period of time, that there's that many conversations that are happening. Amy, you mentioned as well, I mean, that you see part of the strategy is a sense that you're following kind of the value chain here. And I'm curious from your perspective, as we move forward, are you seeing that there will be companies that are integrating a lot of this together, either, as you said, in a holding company, in effect, or do you see private companies eventually kind of bringing all these things together in larger groups?
It's still early days for a lot of these solutions, but you see that that's probably where we're going to go. And we are seeing a certain companies bring different stakeholders together. Like we have a Canadian company, Expertsea, that's really digitalized shrimp operations, bringing data into operations and can track growth from an early stage. They have a mobile app, and they're using that now to they just launched a trading platform to buy and sell shrimp. And you're seeing what that means for exporters. You're seeing what that means for retailers. You're seeing what that means for certifiers and labelers. And everyone's kind of interested in figuring this out together. I mean, Larsen just referred to the ecosystem, and everyone's kind of talking about partners. What's exciting about aquaculture right now is that there is this kind of groundswell of people that see the potential and understand the potential and understand their potential contribution to where we can go. And so there's a sense of wanting to work together. You're seeing a lot of corporates launch venture funds with the idea that they're going to plug in some of these solutions. We haven't been a part of a lot of we've been part of a lot of cooperations at this point, but not a lot of real collaborations yet. But I do think collaboration is going to be the future.
So, and by the way, we have some great venture funds tomorrow as well that'll be talking about this innovation. So we have Nutreco and Yamaha joining us tomorrow. So I'm excited to hear their views on this. Thor, I think in the past, and maybe your thoughts have changed on this, but I think in the past, you've sort of argued that that focused operations are a better way to go, that vertical integration hasn't necessarily played out well for companies. I mean, do you see that the innovation is best done in a focused area, in a specific species, for example?
Well, I do believe focus is necessary, obviously, but at the same time, I mean, I'm a buy and build guy, so size also matters. So I would say, and size matters because it's necessary for your customers to cover a broader range of their needs. It's necessary to retain and recruit talent that you need in order to innovate. It's necessary to attract capital, and it goes on and on. So I do believe that you need to grow in a focused way, right? You cannot be a world champion across the value chain. That's impossible. And we see that historically, the best performers are very good at what they're doing, and then they're outsourcing what they believe is, let's say, non-core operation. I believe that's a good model.
So Tuna, to that same point with Ferd, is a focus on a specific species or sector a better way to go? Does Ferd align itself more with sort of the platform strategy that Thor's talking about, or the more kind of diversified, almost startup strategy that that S2G and Aqua-Spark have kind of taken?
Yeah, well, this differ from the different parts of Ferd. As I mentioned, I think that the impact invest mandate is more similar to what Amy describes. While we focus on these larger companies, which we also hope to build as platform, which Thor is talking about in the Ferd capital part. And we also have the broodstock partner vehicle that focus on the service industry and focus focus on that part of the value chain. So we try to cover the industry quite broadly, but using different part of Ferd. So that's how we attack it. But we obviously totally agree with Thor that it's important to focus, even though you try to build scale. And an example of that is our investment in Benchmark Holdings, for example. They have significantly changed their strategy into becoming more focused, and we see that this has very good results already. So I think that's a very important topic that Thor brings in there.
Right, and that's a good point because obviously Benchmark is a publicly listed company, so these changes that private capital can bring can also happen in the public sphere as well. So, well, we are unfortunately running close to out of time, but Tuna, I want to just go across the panel here and talk a bit about the areas that each of you see as the most exciting, the most underdeveloped maybe, but just to get your views so that the audience can understand from your point of view, what areas are perhaps undiscovered. So Tuna, maybe we can start with you. Where would you see the most opportunity right now for investors in the seafood space?
So I think I would then, if I have to choose one topic, I would say that the data and AI, the use of aggregating data and using that knowledge in such a young industry, I think there's so much potential there, and that goes across the entire value chain, from genetic to feed to the salmon that you have on your kitchen table. So I think there's a lot of opportunity within that space.
Great. Larsen, same question to you.
Yeah, I agree. I think that for decades, the seafood industry has been undercapitalized, underappreciated, under-digitized, and fragmented. So capital's moving into the sector, partnerships are forming, we're seeing innovative infrastructure come online, and decreasing technology costs, which are addressing consumers and their behavioral changes. So we've got the opportunity to reimagine this industry in a sustainable way that's beneficial to our planet, our health, and our economy. And I really think that anyone who's investing in a toolkit of technologies that is new ocean and climate data, genetics, biodiversity, automation, digital tools is really coming out with a lot of products and services that can create a systemic shift. And it'll also create the need and desire for additional human capital into the industry.
Thor, to you as well.
Yeah, so we are mainly looking for great companies, not necessarily interesting segments. Technology is I agree with what has been said. AI, machine learning will, I believe, transform the industry over the next 5 years and make it even more sustainable and improve productivity. We have spent some time to look at, let's say, changing consumer behavior that is accelerated by COVID, where you're changing from the food service channel to retail, home delivery, and that brings the need for skill sets that the aquaculture industry are not flush with, to put it like that, in terms of product development, in terms of more convenient products, grab and go. So we believe that the aquaculture industry over the next few years will be much more accomplished there, and there are some opportunities there also from an investor's point of view.
Amy, you get last word. So tell all these investors out there where all those hidden gems are, so you have a lot of competitors.
Well, I have to agree with the tech piece, but I'm going to take it mostly because of the potential for marketplaces to really create real transparency, traceability in seafood, and to bring in financing, insurance, and to just up the game all around. But I think aside from that, kind of two big opportunities that haven't been talked much about, the whole area of monitoring and treating disease. I mean, the amount of vaccinations and diagnostic tools in aquaculture it's so minimal, it's shocking. So looking at new ways to kind of treat for disease, to take the antibiotics out of aquaculture, to take the stress of my shrimp seems sick, I have to harvest now, and to create a lot more ease and profitability there. So disease battling for sure. And then you can't have an aquaculture investing panel and not talk about feed. It's going to take billions to scale alternative feed ingredients where we need them. And we've done a great job in the last decade kind of identifying them, figuring out how to produce them, starting to bring them to a plan to scale commercially. But again, we need billions to get there. And that's what's truly going to resolve kind of production issues, challenges in aquaculture and get us there.
Well, thanks so much to all of you. This was fascinating. You brought so many interesting views, and again, it's great to be able to have people from all over the world to join us on a panel like this. So thank you so much for joining us. We need to wrap up. Just a reminder that this continues tomorrow. So so join us for 2 more panels, more great panelists. That are going to explore more of the investing in seafood sphere, more of the potential out there. Thank you again. Remember that you will get a second reminder if you've registered, and that link will be what you'll need to sign on to tomorrow when you join. Thank you again to all of you. Thank you to everyone who joined, and thank you again to our sponsor, Antarctica Advisors. We'll look forward to seeing you tomorrow, and follow along on IntraFish.com for more coverage. Thank you.